All right, Ryan. So got a question for you.
All
So
right.
this happens, right? So I'm talking to a client. I say, hey, you know what we're gonna do? We're gonna go get you pre-approved for a loan because that's extremely important part of the process.
Right.
If they're gonna use a loan, if you have all cash, awesome. But most people that are buying a property for themselves are typically buying it with a loan. And so if we're buying a residential property and I say, hey, I'm going to have you talk to my buddy Ryan. Ryan is going to walk you through some steps. And they send you all the documents, right? They're going to send you their W-2s. They're going to send you, some tax returns. Maybe they're self-employed. They're going to, show you like profit loss statements, something like that, right?
Right.
So you're going to review some stuff. And you're going to come back and be like, Brad, I can't qualify them for a loan. And I'm like, oh no, like what am I gonna say?
Right.
Like I want to help this family because no matter what, our goal is always to help people achieve their dream of home ownership.
Right.
So what do we do? What's the solution?
Glad you
What
asked.
happens?
And I would never send anyone back to you like that. No, so we have a really great suite of creative loan programs. They're referred to in the industry as non-QM loans.
Okay.
And basically what that means is there's alternative ways to qualify a borrower. So one of the most common scenarios that I run into is someone is self-employed.
Okay. Like ourselves.
Exactly. They have a good CPA and they're doing whatever they can to limit their tax liability.
Okay.
So in their minds, they're making great money.
Right.
But then when you go and look at their tax returns, a lot of that income has been expensed out.
Right.
And their taxable income is really small.
Right.
And so using that taxable income to qualify them doesn't work.
Right.
So I have a lot of solutions for that particular scenario.
Okay.
The most common is called a bank statement loan.
Okay.
So basically what we're going to do, there's no tax returns involved. We don't want tax returns. We don't want P&Ls. We don't want pay stubs.
Nothing.
Nope. We're going to take your most recent 12 bank statements.
Okay.
Ideally, the client has a separate business account from their personal account, but if it's commingled, we can make that work as well.
Figure it out. Okay.
And so we're going to identify every business related deposit into that account over the most recent 12-month period.
Okay.
And we're going to consider that their gross revenue for the year.
All right.
And then based on a business narrative, an explanation from the borrower of what type of business they have, how many employees they have, do you sell services or do you sell products? We're going to come up with an expense factor. Okay. So automatically we can use 50% of those deposits. So say you had $250K gross based on the deposits in your bank statements. Now we have $125K in annual qualifying income.
Okay. So is that you factoring out the expenses of the business?
Yep. So we don't actually go in and pinpoint expenses.
You just say you get 50%.
50%.
Okay.
Now for guys like us that are 1099 service guys, we don't have a lot of overhead, right? We don't have employees. We're not buying t-shirts and surfboards and stuff to sell retail. So in that particular instance, there's ways that we can get to as small of an expense factor as 10%. Okay. So that we could use 90% of those deposits as qualifying income.
Nice. All right.
So that's a really popular loan. I've been financing bank statement loans since 2018. I have a lot of experience. I've closed a ton of them.
Okay.
And it's really powerful. It helps a lot of people out that feel just hopeless.
That's actually huge because I would say most lenders aren't talking about how they have bank statement loan programs. I mean, that feels like 2002, 2005, and it's like mortgage crash.
Yeah.
So not a stated income loan.
Nope.
But it's based on what you really have in your bank account.
Absolutely. So you are still meeting what's called the ability to repay rule. Right. So after 2008, because of that market crash, there was the Dodd-Frank Act, which put a lot of regulations on the mortgage industry. And one of them was the ability to repay rule. So the lender has the responsibility to document that borrower has the ability to repay the loan. Okay. And so
there's legitimately money here.
Yeah, absolutely. So we do that by saying, hey, look, this guy, or girl, gross $300K. And this is the type of business they have.
But that's so huge for so many entrepreneurs. I mean, we live in a world now that like everyone's like wanting to become an entrepreneur. You've got like so many people that are breaking out and doing their own thing. We've got like this whole like new thing since the pandemic of go out and work remotely, create online businesses, all these different things, so people can really live the life they want, which a lot of people move to Maui because that is the lifestyle choice that they have. And so if that's you and you're like, I'm watching this video thinking, how am I going to qualify for a loan because I write off my income? What Ryan is telling us is you can do a bank statement loan. I mean, that's huge. I love that.
Yeah, it's a great loan. But wait, there's more.
Oh my gosh.
So
is this a commercial?
So we also have products available for no income verification. It's not stated. It's just if you have 20% down and you have over 720 credit score,
all right,
and you have 6 months worth of reserves, then you're qualified. Okay. And so you don't need to list a job on your loan application.
What are our qualifications again?
720 credit score.
720 credit score.
20% down.
20% down.
6 months worth of reserves.
6 months reserves. Okay.
And boom, you're in. And that's for a primary residence or second home as well.
Okay. Is there a limit to that?
There is a maximum loan limit. I wouldn't be able to tell you off the top of my head.
Okay.
But it goes up. It's pretty generous.
It's enough to be able to buy a nice house on Maui.
Yep, absolutely.
Okay.
And then, so that's for primary residence, second home. Those deals work out really good. We have asset depletion loans. So say you have somebody that, was a high income earner, retired. They've got a couple mil in the bank, but they don't really have any income anymore. Right. We can deplete that 2 million. They don't have to depart with the money, but we can basically say, look, they can draw down on this 2 million to make their mortgage payment over 30 years.
Right. Okay.
So that's another great creative financing solution. And then something that's been really popular with investors is the DSCR loan, debt service coverage ratio.
Yes.
So basically, if the property cash
flow,
people
talk about that a lot, and that's great for any kind of investment property. It could be a multifamily property. It can be just like a short-term vacation rental condo, right?
Right. Okay. Yep. There's no restrictions on property types. We can do vacation rental condos, residential condos, single family residence, multifamily.
Okay.
So yeah, it's a really powerful suite of loan programs. And that's something that I really pride myself on. There's a lot of lenders out there that are just looking for the easy W-2 deals.
Right.
A quick, easy
Let me
commission.
just check off the boxes, set this to underwriting, and we're done.
Exactly. Yeah. My goal is to help every client that calls me to find a solution for them.
Yes.
And usually I can.
Right.
And if I can't, then I'm out there desperately looking to find a solution for them. So I'm not going to just punt because it's a hard deal or.
Right. I feel like there's always a way, almost always. Like very rarely is there like absolutely no way unless like either you have no income or you have no credit. Right. But like when it comes to banking, if there seems to be a way if you've got good credit and you have income to figure things out.
Yeah, absolutely. And even without the income, I mean, really, where we're at with some of these creative loan programs now is if you have money, if you have cash, if you have a sizable down payment and some reserves and your credit score shows that you're responsible with your credit, then you can get a loan. And I always like to make people aware that to me, this isn't a repeat of, the lending practices prior to 2008. Because you need a chunky down payment, right? You need to have good credit, right? It's still really quality paper, and people are qualified.
It's not, hey, I just started my online business and I made $5,000 worth of sales today,
and I'm putting zero down and I'm borrowing my closing costs. Those days are gone. So people have skin in the game, and awesome. I think the mortgage industry is in a safe, sound place right now.
Love it. Okay, awesome. So you need some creative options. We've got them.
We got you covered.
Give us a shout. Contact information is below. If you have found this to be valuable information, hit the like, subscribe buttons. We want to be able to continue to provide this kind of stuff for you guys. If you've got more questions, let us know what kind of things that you want us to talk about mortgages, financing options, things of that nature in the future. And we will do another interview with Ryan to go over all that kind of stuff. But yeah, we look forward to answering your questions. And more importantly, we look forward to serving you and helping you find the home that you want here on Maui. Thanks so much.